to this.
Hi, everyone. I'm Vicki Vollweiler from College Financial Prep, and today we're going to be talking about saving money for college. We're talking about the investments and planning and how to save up money because college costs so much. At College Financial Prep, we help people save money on the cost of college, but I do also recommend saving money, as the kids are growing up and getting ready to go to college. So today I'm happy to welcome Natalia Zimnoch from Zimnoch Financial Group. She's our expert today. She's our expert today that's going to answer everything about 529 plans. I'm not the investment advisor, but Natalia is, and she's our expert. So welcome, Natalia.
Thank you, Vicki. Yeah, so this isn't our first rodeo. We've done a few videos together. I know we've done a few seminars together on college planning and saving for college. So stay tuned. I'm sure we'll have a couple more of those together this year. And recently, Vicki and I recorded a video on trying to accumulate for college and help your kids pay for college while also taking care of aging parents. So definitely look through our library of content to learn more about that video. But anyway, today we're talking about the cost of college, right? So Vicki, as she likes to put it, she helps people
Save money. I help people reduce their college costs.
right.
But it's still so important to save money up for college, because even if you have reduced costs, you still have to pay for it.
And that's
And
where I
I'd much
come in.
right, and I'd much rather people be able to pay what they need to pay as opposed to taking it out in student loans and then incurring all that interest. It's still better to have the money put away. So
Absolutely. So, just a quick little disclaimer. Obviously, I am a financial advisor and I do all types of insurance, investments, inheritance planning, retirement planning, college accumulation planning, wealth management, and everything in between. But please do your own due diligence. Please speak with an accountant regarding any tax related questions or any tax related things I might say to confirm anything that I might share on today's video because I'm not an accountant, but I am a financial advisor. So with that said, we're talking about saving up for college. So Vicki, I know you mentioned 529 plans. So tell me a little bit about, let's kind of do like a frequently asked questions on 529s and saving up for college. Um,
so
yes.
here, the basics. Explain for everybody, what is a 529 plan? Some people have never heard of it.
Sure. So 529 plan, that's pretty much a section of the tax code. And what it is, it's a plan that allows you to accumulate money for your child uh, on behalf of your child who is a minor inside of this specific plan. And there are tax deduction
Benefit.
opportunities for for you as the adult or the parent or the grandparent or the aunt, uncle. Those you can then deduct some of those monies that you put into the 529 plan on your tax returns. Typically, the tax credits or the deductions, they fall under the state level and not so much the federal level. But there are certain caps and limits. I'm not going to get into the exact details, but because I know there's
So
people from
here,
multiple, yes.
explain why it's beneficial for parents to do this.
Okay, so you put the money into the 529 plan, you get a state level tax credit or a tax deduction up to a certain cap limit, right? Then the money inside of the 529 plan is invested. You can choose your investment options. You can, allow me to help you set up the plan and help you monitor those investments and change them over time. And all of that money that grows and accumulates tax free if those if those funds are then used for the cost of college, but not just the cost of college. Actually,
Right?
the
It can be
past
used for private school K through
yeah,
12.
K through 12, exactly. So the past few administrations have actually made it so that the 529 plan money can now be used anywhere from kindergarten through 12th grade, and not just for college. And you can use that for private education. So, very cool. Not only is it a great way to put money away, but it's also, tax efficient, tax effective. And if you're a high income earner, I'm sure you can take any tax deduction that you can, right? You
Even if
want,
you're not
even
as
if you're
high
not
a
a high
tax
income
earner,
earner, yeah.
it's still a wonderful vehicle, I
Great
think.
way to put, correct. Yeah. So 529 plans are kind of versatile, but they're also kind of limited, right? Because they're purely for educational costs.
But if you have, say your child decides not to go to college, or
Ah,
say they get a full ride somewhere,
yes.
then what happens to all that money?
Great question. And I get that question all the time. And I have a lot of parents ask, well, where else can I put my money? And, where it's not limited just to educational and, funding. Well, let's start with the answer to the question of what happens if my child gets a full scholarship, or they don't go to college, or they go to a trade school. Well, trade school is still a higher education, so chances are you can probably use the 529 plan money for the trade school. And there's also a lot of now international colleges that also participate with the 529 program. That's becoming like a more common thing. I'm seeing people study overseas. So that's also an option. And then chances are you maybe have more kids. So if the one child, let's say, gets a full ride, full scholarship based on merit, based on maybe sports, well, you can then transfer the money in that child's 529 plan over to another child, right? So that money doesn't go to waste. But now, what happens if there's only one child and they don't actually end up using that 529 plan money, or there is some left over, which actually, honestly, is pretty rare. Typically, that money goes pretty quickly. But, sometimes we do run into situations where wealthier grandparents or relatives made a large gift into a 529 plan, and there are leftover funds. Well, you can then transfer that money either to a first cousin, or you can use it for yourself for education costs. What about if you wanted to go back to school and become a nurse, do a career change? If you are older, maybe there's always something you wanted to learn about, take a course. You can then, as the parent, or the person who made the gift, you can then use that money for yourself. And as long as it's used on educational costs, you're good. You can then pull that money out without any tax consequences.
Fabulous. But what happens now? So there's money in the account. There's nobody to transfer it to. What happens to all the money? How do I get it back?
So in like kind of a worst case scenario, you have to pay taxes on the gains. That's really sort of the worst case
So the
scenario.
benefit of putting it towards the education is that you're not paying the taxes on the
Right.
gains. But now when you
Exactly.
want to use it for something else,
Right, exactly. And you
okay,
do
now
get that state tax credit, which is helpful when you're putting the money in. So it really is, a win-win-win. It's kind of like a triple, I don't want to say triple tax free, but it's definitely a triple benefit in terms of it's a smart money move. Everybody should have a 529 plan. If you've got a few extra bucks and you want to put some money away for your kids' college, give me a call. Now, what about, I have parents that are like just, stuck on the fact that, well, what about if my kid needs a car? What if they don't want to go to college at all, and maybe they're going to take over the family business and they just need cash, they need capital, they need this, they need that, right? Um, well, where do we put the money where it could grow in, in a nice protected manner, but it's also not um, uh, I would say, I don't want to use the word not counted, but it's not necessarily, Vicky helped me out here. Many colleges sort of exclude it from their financial aid calculations, right?
Are you getting towards the Roth IRA?
Getting towards a Roth IRA, but more so a cash value life policy, um, because the Roth IRAs are meant so more so for retirement, a smart thing that you can use for your kids, but the cash value life insurance policies, you can actually borrow the cash inside of the life policies when your kids go to college, they take out a loan, or you take out a loan on their behalf from their life insurance policy, or perhaps even your own life policy. And then, you either pay that loan back yourself, you can have your kids kind of paying you back, right? And give them some sort of level of responsibility. The loans are pretty flexible. It's not like you have to take those loans month over month, pay those loans month over month. If it's the holiday season and you need to, skip a payment or make a lower payment on that loan, nobody's gonna, crush you for it like a bank loan or a traditional student loan. So the life insurance policies are pretty awesome. They're a really cool flexible vehicle, and you can use that money for college as well. But you can also use it for not college, buying a car, using capital to help your kids start a business or grow a business, and so many other things. And once that cash gets repaid, you can do it all over again, and they can take that loan for any type of future needs that they might have, or pull out cash in the future again. So just really cool, versatile vehicles. There's also, investment accounts, brokerage accounts, but then those count as assets towards, if you're looking to get any kind of financial aid, right? So right, Vicky, you can attest to this. If somebody goes to apply for financial aid and say they have $150,000 in a regular brokerage investment account as opposed to 150,000 in a 529 plan, the college is going to look at that a lot differently, or say it cash
Yes,
in a
but
life policy, right?
it all depends on which colleges the students are applying to. Um, and when you have little children, it's very hard to predict. You can't predict where the children are going to go. So while you think you may be protecting funds, you might be, but you may still have to report them on other financial aid applications.
Exactly.
Um, don't get scared of putting too much money in a 529 plan. Yes, you have to report it on a FAFSA application, but overall, um, when the schools and the government look at your application and they see investments, they don't specifically see how much is in a 529 plan. It's not designated that way. It just looks like a parent investment. So if you have $100,000 in that account and it's listed on a FAFSA application, they're going to assume that 5.64% of that $100,000 can be put towards college.
Yeah,
So,
interesting.
so nothing to be scared of.
Yeah, so there's different calculations, as you guys can see, for all different types of colleges and different, it really depends on what you're applying for, and what programs you're going for, and really how much money you're going to need, right? I have clients who I got this great couple upstate, actually. They're both doctors, and they had a 3 going on 4-year-old daughter, and they're like, she's going to medical school, and we're going to need about $100,000 a year for her education for X number of years. And I'm like, we need to start putting that away now then. And, they were like super determined, and so, we really, at the end of the day, Vicky, just based on everything we've talked about today, I think diversification is the name of the game. there's no rules or restrictions on having a 529 plan, having a cash value life policy, maybe having something else, set up for your kids. And maybe you liquidate the money from this account and, we do some wise planning so that that money's not on the books and you have a better chance of getting more financial aid money, right? And you use that money to buy a car, and then we use this other bucket for the cost of college. So, really, what we do here at Zimnoch Financial Group is we look at you lay all the cards out on the table for us, and we will help you put those cards in the right order and really help you pick which buckets of money to pull from for what specific life events you need to pull for, right?
Yeah, and I think the key to it all is don't be scared to have savings for college. It's important. Don't just rely on student loans.
Absolutely.
I want to thank you, Natalia, for joining us today. I think this was certainly a great help to all the people that have asked me this question over and over about 529 plans. So I hope that everybody watching is finding it as informative as we are, and please feel free to reach out to either Zimnoch Financial or College Financial Prep with any questions on how to save money for college and how to reduce your college costs.
Thank you, Vicki.
Thanks, Natalia. Take care.
Take care. Bye bye,
Bye.
everyone.